Welcome to the Circle of Trust, the podcast where campaigns and strategies to grow law firms are unveiled. Hosted by law firm Chief Marketing Officer Keith Dyer, the founder of LEXGRO. This podcast is dedicated to being a safe and objective place to educate and train law firm owners and personnel on the marketing secrets and strategies that bring in consistent cases and predictable revenue. Whether you're a solo practitioner, a small firm, or a multi-partner law firm ready to scale, this podcast and the LEXGRO platform are your trusted go-to source for objective and cutting-edge marketing and intake training. And now, Law Firm Chief Marketing Officer Keith Dyer with The Circle of Trust.
Hello, how's everybody? I hope it's a good day for you. I'm here today to present a module, or I guess a better way to describe it, a webinar or a teaching session, whatever we want to call it, Ryan, with my friend, colleague, collaborator, Ryan Kimler. Ryan comes to us from Missouri, from Winston. Is that correct?
That is correct. Yeah. The greater St. Louis area.
Yeah, it's a suburb of St. Louis. Ryan is a fractional CMO for law firms, and he's all about helping law firms gain more profit so that you have more take-home pay. And I'll let you describe more about that, Ryan. Tell us about your business.
Sure. Yeah. So as you mentioned, I work really as a part-time CFO for law firms. And inside of my job, I really have, three roles that I play for a law firm. Number one is, I'm helping them track revenue, profit, and cash flow. And then number two is I really get in there and I analyze the strengths and weaknesses of the law firm from a financial perspective. And then the third part is I work with the business owner and propose corrective actions so that we can correct the numbers that are the weak spots in your business and really help you improve your finances, really help you become a stronger law firm financially, which, Keith, as you mentioned, means stronger profits, more cash flow, more take-home pay for the attorneys that I work with.
Right. That's so important. I mean, I feel like once you have, first of all, I think that most business owners, especially even more so lawyers, because they're focused on practicing law, can sometimes struggle with finances and struggle with projections. And so this whole discussion today is designed to offer up some advice and some tools for law firms so that they can actually take these tools, and these tools that we're going to provide are in spreadsheets today, and the law firms will be able to, you guys will be able to download them and use them directly. And so once you have that kind of clarity about what your budget is and how you're going to borrow, perhaps if you need to borrow, how you're going to pay that back, etc. Once you have that stuff in at least in some clarity in your mind, the confidence level in growing your firm, I think, grows a lot. And you also have You've covered the base of knowing that responsibility as an owner of the law firm is in clear sight, and you have a good plan, and you're not overextending yourself or not borrowing enough, etc. And so today's discussion and these tools are going to be offered to you to help you with that, right?
Absolutely. Absolutely. Yeah. I mean, having a good vision and having, a good projection on where your business is going and having a good forecast on, the money that's going to be coming into your firm is really, really important. Your finances should always go beyond just, this is how many cases I want to have next year, and this is how much revenue I want to make next year. Right. I mean, I think that's where a lot of law firms stop. And, you really need to go beyond that and really find out, what are your profits going to be? What is cash flow going to be?
What your cost per acquisition is going to be?
Yep. All of those things.
Right.
All those things. Absolutely.
All a very big deal. All right. So we'll dive in here right now, and I want to explain the spreadsheets real quickly. We have three tabs basically in one sheet, but there's a spreadsheet for contingency law firms that will help determine how much they need to borrow and how, in order to grow. And then we did one for non-contingency as well. And then finally, we have a great budget template that was provided to us by our good friends over at Eight Figure Firm in Atlanta, Georgia, a great consulting firm that we work with, and I've worked with several law firms. So without any further discussion about it, let's just dive into the spreadsheets. Ryan, I'll let you take it from here.
Sure, absolutely. Yeah, let me share my screen. And again, as Keith mentioned, I mean, this is something that he and I worked on together.
Yeah, we did collaborate on this, which I thought was a lot of, very beneficial.
Absolutely. A lot of fun.
Well, and
So
also it's just good for marketing and finance to be working together and not in silos, right?
absolutely. Yeah,
It's so important for you to know what I'm projecting to spend or what the firm is projecting to spend and what we may need to borrow so we can come up with a solid plan to get it back, right?
absolutely. Absolutely. So the spreadsheet is really very, very simple. And the main rules for this spreadsheet, and also you'll see down here, we've created a tab for fixed flat fee and hourly bill attorneys. Biggest rule is you can only edit the numbers that are in gray. All right. The rest of these are really, calculated fields, and you're not going to need to change as the attorney. So we try to make it as simple as possible, only having you edit the fewest number of fields that we could. So here it starts at the top, putting in a date. So here I've got 1/1 of 2024. So that would be like, for the month of January. And then you'll see as you go across, the dates are going to continue to move and roll forward into the next couple of years. All right. And then for the contingency firms, we really wanted to show a model of what would it look like to spend a lot of money on marketing to really ramp up and grow your firm quickly, and how much money would you really need to go raise or invest. I know Keith has had a couple of lenders on his podcast show as well, and so how much would you need to go and invest in order to really ramp up your firm quickly, get the volume going, and what is the net cash flow that you would need to go out and get a loan on, right? And so 3 expense buckets that are really important to consider outside of or 2 other expense buckets outside of the marketing, I guess. First one being HR, right? So this is really, what is your payroll expense? We have this, gradually going up in the model, but you can definitely adjust this as needed, depending on, how many cases that you're signing and how many employees that you need, right? And then total overhead, again, we just forecasted this continually, kind of growing, figuring, if you're really going to grow and expand your contingency firm, you're going to have more costs, more office space, those sorts of things. So we tried to make this model, somewhat conservative. Then down here, kind of in this middle section, rows 13, 14, and 15, we get into how many employees do you need for the number of cases that you're signing, and what is your average case fee. And so in this model, we started out signing, 20 cases, then 30, and we kept it growing, right? And we also started the average case fee at $6,000, and we kept it growing, on out into the model. Obviously, if your case fees are higher than this, you're going to generate more revenue, which means you're going to be able to cover your expenses easier. So again, Keith and I we got together, we tried to make this model, somewhat conservative here so that, you can really see what it takes to invest and really grow a larger contingency firm. So down here at the bottom, once you insert the number of cases and the settlement fee, you're going to get the amount of revenue, right? So this is a calculated field. This is showing the monthly revenue that's going to happen based on you settling cases. And then here in row 22, we've got what are your profits going to be, right? So this is basically taking, our revenue minus our total expense row. So basically, row 20 minus row 11, right? And then down here in row 23, we've got a cumulative, profit and cash outlay, if you will, on what is the cash that needs to be spent if this is what your business looks like, right? And again, this is a calculated field, so it would update as you change the numbers. So, here in these first 2 columns here, you'll see that, we have a total loss of $317,000, and you'll see that number is there, right? If I capture the first 3, you'll see that goes to $437,000, and that number is there. And so if you look along this bottom line, the largest point or your tipping point where your biggest investment is, right? Because most of your expenses is being invested into marketing to grow your firm, is about $800,000, right? So if this is the model you wanted to take on, and really grow your firm, really grow the contingent firm that you have, right? You're looking at investing a little over 800K. And then, you'll see after that 8th month, after the month of August, you start having profits and the amount of money that you invested starts to be returned. And that return continues as you roll into the next year. Again, because in this model, we have the number of cases continuing to grow. We have the number of employees that you hire continuing to grow. And we also have the average case fee continuing to grow a little bit. So, 6,000 to 7 to 8, et cetera. And then, as you keep going down the line, you'll see the profits and the cumulative returns on your investment. And that's where this bar turns green down here at the bottom.
Yeah, that's the promised land.
Yes, it is.
And I think it's important to note that you've got in column 9 in August, you kind of see the peak of what you might need to borrow. And then you may even be on top of that, borrow another extra 100 or 200 just to make sure your calculations have some padding in them, and you're able to survive whatever unexpected things might come up, right? So that's what this spreadsheet is designed to do, is to be able to give you the ability to go in and say, okay, this is how much I need to borrow, and this is how long it's going to take me to pay it back, and this is what my expected return on investment should be. And of course, this is all assumptive, right? It's all assumptions. The gray areas, literally the gray areas, are areas that need to be filled in by the law firms for their specific, and this is for their specific circumstances and their numbers. But this is going to be really more for personal injury type law firms that are this spreadsheet is for firms that are really trying to grow aggressively and are willing, they have the risk tolerance to try to grow their firm in this way. And so that's what this first spreadsheet is for. And then I think, at this point, unless you have something else you'd like to add, you could go on and kind of discuss maybe the differences in the fixed fee, non-contingent fee.
Yeah, I'm just gonna add one more thing right down here.
Yeah, please add whatever you'd like.
I'm just gonna type in, these are gonna be the rows that our audience is gonna need to update. So, cell B4, which is right here, this first date one. And then after that, you really need to update rows 9, which is HR, row 10, which is overhead, row 13, which is the number of employees that you have, row 14, which is the number of cases that you're going to sign on a monthly basis, and row 15, which is the average case fee. So these items right down here, I put these in these 2 cells. Those are the rows that can be updated. Again, Keith, as you mentioned, all the gray areas on the spreadsheet, and we can probably make these 2 rows a little bit darker of gray, so they look more the same shade of that gray. But we'll make those edits, and you've got notes down here. So those are really the rows that need to be edited on the spreadsheet.
Let me ask you a quick question about the marketing column there. I'm sorry, the marketing row.
Sure.
If they wanted to change that to the amount that they, what if it was a lower amount, that would change this up too.
It would, absolutely. Yeah. So if I change this to 150, obviously right here, your total expenses change, which also means that your profits down here change. Your revenue didn't change because I didn't mess with the number of cases that you signed or the average fee. But I would also, probably tell whoever's, adjusting the marketing budget. I mean, you want to factor in, if you are going to reduce the marketing spend, you want to factor in, how does that affect, the average case fee and the number of cases that you're signing, right? Because obviously, what we've forecasted here and the idea that the firm is going to be growing and really getting traction, that does take marketing spend to get that done. So yes, you can adjust row 7 and all the numbers will update, but but you should also factor in rows 14 and 15 are going to be tied to what you do in row 7.
Sure. No doubt.
And
Yeah,
I
I
can
think
just, yeah, go ahead. I was gonna say, well, I can fill this, if you filled that across real quick, right, to say, maybe my risk tolerance isn't as high, I just filled 150 across instead of 250, right, for the first 9 months. And you'll see that our green return line moved up, right? So you start getting returns sooner. And the amount that you need to invest became less. But I also did not adjust row 14 and 15, which is the number of cases and the average case fee. So these numbers might not be realistic right now.
right. And so, and I guess we'll kick off going into the other tab by saying that, this, because it's contingent based fee structure, then there are many months where the return is negative until it finally flips. And that's what this is sort of designed to show you, is when will that happen, how much you need to borrow. And this is a great tool. And if you run a personal injury law firm, I would suggest, even if you run a fixed fee as well, I would suggest you take these and go for a day with your CFO or your whoever helps you with your finances within the firm, or even your accountant, and go through this for a day and make sure you have a solid plan in place, and you're not, if you take a day and work on it and you're not distracted, I think you can make a lot of progress on that.
Absolutely. Yeah. Having the right guidance in the room with you, and having that collaborative meeting, that annual planning meeting, is super, super important.
Yeah, and perhaps it's a meeting with marketing, operations, finance, everybody in the room for to work through it. And so,
absolutely,
yeah, great. And so maybe over here in the column where you show what rows should be updated, you might just put a little above it to say columns that are to be filled in by law firm, whatever makes sense, just so it's descriptive for them.
Yep. Actually, here I can probably bold that. All right.
Perfect.
So let's move forward to fixed fee and hourly. And actually, I'm going to go ahead and copy. I think this is going to be near the same for this spreadsheet as well.
Right.
So here we've, similar layouts. If you've been paying attention and you've been with us, this first date for the first month is really important for you to type that in. And then, the rest of the columns are going to roll forward a month at a time. Right. And then, the only big changes here are, really you can absolutely, the only difference here is I've calculated the expenses really based on a model that I've seen work and seen be profitable for fixed fee and hourly based attorneys. And so what that formula looks like is usually about 10% of revenue is on marketing spend. If you're in a little more of a competitive space, sometimes I see up to 15% on that. So this is times 0.1. So in other words, 10%. On the HR side, that's for payroll and things like that. I see firms that keep their payroll expenses under 45% as a firm total, and that includes the owner on payroll, really have a successful business. And then on the remaining overhead, usually that's 20% of revenue. And that really sets the firm up to be profitable and have success. And so you'll see here, our total expenses are $30,000 when our total revenue is $40,000. And that's because if you add the 45% for payroll and HR along with the 20% for overhead, well, that's 65%. And then add in the 10% for marketing. Well, now you're at 75% of your revenue. So that leaves 25% for profits. And if your marketing budget does, ramp up to 15%, you're still left with 20% profit. So actually the information is a little different here. You don't have to adjust rows 9 and 10. it's really just rows 13, 14, and 15, where you're looking at revenue. How many employees am I going to have? For how many cases a month am I taking on? And what is the monthly fee that you expect those cases to generate? So when I say, monthly fee, if you're, let's just say you're a family law attorney and you're taking on a divorce case. And let's just say that divorce case in total, you expect the billings to be $8,000, and you expect that divorce case is going to run 4 months. Well, your monthly fee on that would be $2,000. And so that monthly fee, repeating over, those 4 months is what you need to put in row 15, is what your average monthly fee per case is. So same thing if, let's just say you're let's say you're an estate planning attorney, and an estate plan is, $4,000, and it normally takes you 2 months start to finish. Your monthly fee would be $2,000 as well, right? And then in the cases row here, that is the total number of cases that the firm has open. And so, you can ramp that up as you see fit, and obviously adding staff along the way. And then the rest of the expense numbers and profit numbers will really calculate for you. As you see here on this page, this type of a model is a lot less risky than the contingent model we just went over. That really, this type of firm you can really set up to be profitable and green from day one, as long as you've got your expenses in check.
Right. And you could increase the marketing expense, and that would hopefully increase the number of cases, which would compensate for the increased marketing expense. So
absolutely. Yeah. And I think it's important to, you can absolutely, like I said, if you're in a competitive space or, really wanting to grow more quickly, you could absolutely, right now I've got marketing at 10%. You could absolutely ramp that up, to like a 15% mark. Start spending more on marketing. I can do that here real quick.
Yeah. And even I think if you were very aggressive, I wouldn't recommend going over 20%, but not for these types of firms, but 20% would be an aggressive, 10% less, somewhere in that range.
Yep. Yeah. So, here I just updated this to 15 real quick, and then just, drag across, you could update your marketing budget to 10%. And obviously, the profits down here are affected as you ramp up your marketing budget. But again, as I talked about on the contingency page, if you're ramping up your marketing budget, you should be getting a return out of it. And, this row 14 and 15 on the number of cases and the monthly fee is probably going to change as well. So, changing one factor, really has a domino effect, and it ends up impacting, a couple other factors as well.
Which I think is the whole purpose of why we're doing the sheet.
Absolutely.
So you get a picture of what that looks like, and you're not just making arbitrary changes and not considering the domino effect on the other, the other areas of importance that you got to watch the costs.
Absolutely.
Watch the costs, and then also calculate, hopefully calculate accurately how many more cases you're going to get from the marketing.
Yep. Absolutely.
Well, great. This has been super helpful. Is there anything else you want to add about these first two tabs?
No, not that I can think of. I think I think probably the hardest number on these two tabs to really come up with, or the couple of hardest numbers, are number one, what is your average monthly fee on your case? And then number two, just forecasting out the number of cases that you expect to bring in.
That's the key piece. It's the hard part, right?
It is.
And that's where the marketing comes into play, and hopefully it's effective, and you're organized, and you got an organized and well-oiled operation to be effectively execute the number of cases that you need to every month.
Yep.
To be able to pay for everything. So
absolutely. Yeah. And I think, as an attorney, if you don't quite have a good handle on these numbers yet, as far as the average monthly fee and the number of cases that you're getting for your marketing spend. Those are definitely areas, that you need to dive into that data. There are definitely two really important points that you need to be tracking. And, if you can't get a good handle on it, then, you probably do need some help with it. But those are just numbers that you've got to know, operate a successful law firm.
Absolutely. And I mean, also what factors in here too is accounts receivable and
Yep.
fee velocity, cash flow, all very important pieces to this as well. This is more high level. Those other things are things you would need to dive into to make sure you have a healthy law firm.
Yeah. And obviously on the contingent side, they shouldn't have a lot of AR, right? I mean, you get the fee settlement and you get the fees first. So, you cut your third out of it or whatever it is, right? And on the fixed fee and hourly side, really to cut down on AR there, I mean, you really have to utilize trust retainers, right? And that's where, knowing the total value of a case and knowing the monthly fee that you typically charge on the case, that's where knowing that number is really, really important, right? For the hourly billers or the, flat fee cases, typically you're 3 months into a case before you find out if your client's going to pay you or not. So, Keith, let's just say somebody takes on a brand new case in the month of January of 2024. They're going to work the hours in January, right? And then those January hours are going to go on a bill that's going to be issued maybe February 1st, right? If the law firm is really, really efficient in billing on the 1st, right?
Yeah.
Most are not getting their bills out that quick.
Yeah, and that's a big factor. They need to get them out as fast as they can.
So let's just say the bill goes out February 5th. Okay. Well, most law firms have 30-day terms on that invoice. So, you started work January 1st. Now you're not really due a payment until March 5th, right? Because the bill went out February 5th. So, and then your clients, they take you halfway seriously. They kind of follow the mortgage rule, right? Where it's like, well, it's due on the 1st, but it's not technically late until the 15th.
They're going to pay you on the 14th.
Yeah, exactly. So
if not the 28th.
Yeah, so they're going to get their bill on the 5th, and they're probably going to pay you about 15 days later. So, you started work January 1st, just to go through the timeline here. You issued the bill February 5th. It was due March 5th, and you're really not going to know whether or not they're going to pay till about March 20th. So at that point, and by the way, even after you issue the February bill, you're still working on their case throughout the whole month of February. And by the way, you're still working on their case through the whole month of March from the 1st to the 20th. And then the 20th rolls around, you're like, they haven't paid me yet. Now you might be looking at, do I have a deadbeat client that's not going to pay me, right? And so for the flat fee and hourly firms that I work with, I always recommend, if it's going to be ongoing work and you're going to bill on this case, and especially if you're hourly rate and you're litigating, you really need three months of a retainer, right? To cover that timeline that I just talked about, because the worst thing that could happen is you get to March 20th, you find out your client's not going to pay you and you've collected $0 and you've invested 3 months worth of work. And so you get that 3 months retainer, and then, that gives you time to make a decision, take the money that you've already billed and basically send them a letter that, you're not going to represent them. You're not going to be their attorney anymore unless they pay you. So you need to collect a 3 months retainer, and that's going to help you steady cash flow. And that retainer also needs to be evergreen. So, when you send out the February bill, they should pay it, right? They should not pay it because they have $6,000 in their trust. They should pay it. And that payment should go to the trust account. And then you take the fees from out of trust and move them as earned to pay the invoice.
Yeah, I mean, that's just financial prudence,
Yep. That's a good system that I've found that works for the flat fee and hourly attorneys to make sure their AR collection rate is really, really high, to make sure that you're not going to be strapped for cash flow. Because while we do have $10,000 of profit here in our model, if you don't collect all $40,000 of revenue, that's coming out of your profits, right?
And that could turn this thing upside down very quickly.
It can, yes. Yes, absolutely. I mean, you're not going to see that on your profit and loss because AR is factored in after profits. But the downside is you're going to pay taxes on that 10 grand. And so if you haven't collected the money, that's kind of a double hit, not good.
Yeah, you're right about that. Well, great. This has been super helpful, and I appreciate you walking through it. We do have a final tab here to look at, and I'll let you pull it up. This is, again, a great budget template that was provided by our friends over at 8-Figure Firm in Atlanta. It's a consultancy and a coaching program that I've worked with over the past couple of years with a few of my clients. And they offered this up yesterday in an email, so I threw it in here, but wanted to make sure they got credit for creating it. But this is just a really good, straightforward, easy to use budget planning tool for 2024. And I'm not going to get too far into it. I think it's very self-explanatory. We can talk real quick about the marketing budget. Again, Ryan and I have discussed this. I mean, you certainly don't want to spend zero on marketing unless you have some really great source of cases that just consistently pours in to the firm. Even then, at some point, you would want to grow, and that growth would require marketing. And so, if you're a newer or smaller law firm, we recommend you stay in that 10 to 20% budget range. If you're a larger firm and you've got more budget tolerance and more risk tolerance, and you're over $1 million in revenue, then you can start looking at 20 to 25 maybe percent, depending on how aggressive you want to grow and what your market is like. So I'll leave this with that, and these advertising expenses. That's where you would work that percentage in. But there's not a whole lot more I would explain on this. It's pretty self-explanatory. Is there anything you wanted to add about it, Ryan?
No, I don't think so. I mean, I think it's a pretty good tool. It's very detailed, as far as the expenses that you are going to experience, in your law firm. And, this type of a tool, along with what you and I have built, Keith, is really going to help law firms map out their future, right? And really help them look at, the model that they have, and is it scalable? Can it work? And, what do my numbers look like long-term, especially if I want to put together, more of a long-term plan for where my law firm's going. I think all three of these tabs are very, very, they're very, very good, very, very beneficial, very helpful. And you should really utilize them.
Yeah, it's a terrific, this spreadsheet and these three tabs is a terrific tool to get started planning for 2024.
Absolutely.
And that's what this whole thing was designed to do, is to give them a start on that. And there will be other things that we'll talk about in other episodes or other webinars, where what are the key performance indicators, and et cetera, that you need to be looking at as you get into the year. But this is the starting point of what you would want to do before you dove into that any further. But without anything else to discuss, I appreciate you being on here and appreciate your time as always. Ryan and I are going to be collaborating on some really great things coming up in the future. But for now, that's pretty much it. Ryan, do you have anything else you want to add?
No, I appreciate the time, appreciate the opportunity, and excited that this tool that you and I spent some time working together on is really going to benefit a lot of law firms out there. So thank you for having me, and no, it's been great.
Yeah, thank you too. Thank you, everyone. We'll see you next time.
Thank you for tuning in to this episode of The Circle of Trust. If you found today's insights valuable, consider subscribing, rating, and reviewing on your preferred podcast platform. Your feedback fuels our mission to bring outstanding content. For additional resources, show notes, and exclusive offers, visit our website at LEXGRO.com. where you can join our platform for free. By joining the platform, you can take our marketing training to become certified in law firm marketing and intake. And you can hire fractional executives and trained virtual assistants to easily implement your marketing strategies. For those ready to take action and explore how a fractional chief marketing officer can transform law firm success, scheduling a strategy call is just a click away. Simply follow the Calendly link in the description box below. Remember, the journey to 7 to 8 figures starts with the right strategies and support for implementation. Join us again next time for another exciting episode. Until then, listeners are encouraged to keep innovating, growing, and uncovering the secrets to predictable and consistent growth. See you next time on the Circle of Trust. Let's grow with LEXGRO.